at William O'Neill. Dean, good morning. Thanks a lot for joining us. First of all, Happy New Year to you. I hope you and everyone around you is staying safe with this rising cases of COVID. Your thoughts on what the new year has in store for markets? Of course, we'll have the Fed minutes as well. But how are you viewing the current market situation?
Yeah, I first of all, Happy New Year and thanks for having me. I think globally, it seems like a lot of countries are battling, creeping up of inflation. And so we've seen the Fed trying to address this by entering the tapering. So they're going to be tapering the economy until about June, and they're signaling starting to raise rates after that. And so, we've seen the market take a knee-jerk reaction, both, NASDAQ and S&P kind of retreating a little bit. What that's done also is U.S. dollar has peaked up since beginning of November, and that has made an impact in emerging markets. So we've seen, of course, India Sensex sort of retreating. Now we're running up against 50-day moving average. And so we've seen kind of similar trend across developed markets. A lot of nations are entering sort of a rate increase cycle now. And so I think it's going to be a little bit of a touch and go situation for the first half of the year. We have to watch U.S. dollar very closely because as we get close to June and the Fed is serious about raising rates, I think we're going to see some upward pressure on U.S. dollar. Oil price, continues to be steady. So I don't see any kind of major fluctuations there, which is great for India. We need to see kind of oil prices holding steady. I think, given that that's a consensus call, really the wild card now is China. And so, are we going to see stimulus entering China in the form of both monetary and fiscal policies from the government? And if that's the case, then I think that's great news for rest of emerging markets, as well as developed markets as well, because they are they're heavy trading partners for a lot of the emerging market countries, including India. So I think that's the wild card. And if that plays out, then I think we should have a very decent second half of the year. But I think we should sort of consolidate where we are during the first half.
Dean, hi. Good morning. Is there a compelling trade, a sector that you really like, a theme which you'd bet on here, and why?
Yeah, I think we continue to see basically basic materials, capital equipment, and consumer retail continuing to be very strong. Basic materials, you have companies like Clean Science Technology, Navin Fluorine, Fine Organics in India. Basically they're going to continue to supply the growing demand for the rest of the world, as well as you have cap equipment. Basically, we're still in this reflationary period where we've coming out of this huge COVID hit in 2020, and the demand is still there. And as well, energy companies, they're continuing to battle the supply constraints. And inventories are very low for oil and gas. And so I think energy companies will continue to do decent going forward. They have taken a hit somewhat, but I think they're going to come back. So, in terms of cap equipment in India, I think GMR Infrastructure, Schaeffler India, those are looking really good. And then consumer cyclicals, you have Tube Investments, Bardman Textiles, and Orient Electric. So I think those are the names that are looking technically setting up really well at the moment.
Okay, well, those are some specific names. Dean, good morning and Happy New Year to you. Wishing you a safe New Year, a healthy one as well. What else in the Indian markets? We've had a great run in some of these theme-based stories. So, for example, now COVID cases are on the rise. We've seen diagnostic companies, hospital companies, healthcare as a whole do very well. Technically, do you still like any of these names?
Oh, yeah, absolutely. I think, companies like Sun Pharma Industries is setting up well. Max Healthcare Institute, and as well as Fortis Healthcare. Those are some of the healthcare names that are setting up quite well. From our lens, it's looking like these stocks want to go much higher. And then I would also say, even in tech, we're seeing opportunities like Infosys. Infosys is setting up once again. So there's plenty of names in India where, I think you can enter here and keep an eye on it. As Anuj mentioned in the beginning, we need to make sure the Sensex or the Indian index rises above the 50-day moving average for these breakouts to work. But these are some of the names that are looking pretty good.
Okay, that's an interesting point you're making as well. Dean, so what about the Bank Nifty? Because that's been the underperformer. And within that, if you've looked at Kotak Mahindra Bank and HDFC Bank, because they need to move for the Bank Nifty to move.
Right. Yeah. The only bank that's looking pretty good right now is ICICI. But definitely we're looking for HDFC Bank to sort of break above 200-day moving average in order for us to take action. But I think once the problem has been that foreign investors have been taking money out of India, and so as soon as the Fed started to signal, tapering and raising of rates, the money has flown out of emerging markets, and because of the stronger U.S. dollar, and I think once that issue is settled and we get to perhaps second quarter, that's probably when foreign investors may come back in. And that's when I think these large cap banks are going to start to work again. But I would definitely keep an eye on, key moving averages. If these banks start to break above them, then I think the rest of the year should be pretty good for them.
Dean, last week, which was the last week of 2021, markets were up 2% here in local currency terms. Do you think that FIIs, the bulk of the selling is behind? I was looking at EPFR data, which showed that outflows slowed down, but that could also be because, it's the last week, activity thins out, etc. But in your opinion, as we come back in this new year, has the bulk of the selling already been done, or you think there is more coming?
I think we should be patient. I think there's a little bit more coming because as we get to second quarter and we start to hear the Fed talk about their plans in terms of raising rates, that's probably another cycle of U.S. dollar strength, and we could see further pulling out of investments in emerging markets. And so I would say, stay patient. Don't go into stocks where prices are living below the key moving averages. We'll know, when things are ready for breakouts, particularly for large cap banks, when, I think the narrative is done and the market has priced some of that in, and foreign investors or FIIs start to look for opportunities in India again.
Okay, just one question. You said that you like Infosys in the technology sector, but we've seen outsized gains in some of the broader market stocks as well, right? Whether it's KPIT Tech, Tata Elxsi, Mindtree, Persistent, any of these stocks that look good to go for more?
I'm kind of cautious about, stocks that are super extended. Companies like Mindtree, fantastic company, but, they're way too extended. So, what I would try to do is look for opportunities for stage 1 or stage 2 base type breakouts, and those names tend to be the ones that I've mentioned earlier on. Even some of the I'll give you an example. If you look at United Spirits, they're running up against 50-day moving average, and the stock is quite extended, and there's danger that it may fail there and pull back. Another one is BSE, as well as Rajesh Exports. So, just be mindful that when stocks are, super high, let's say 50 to 80% above 200-day moving average, and you see them kind of running up against, resistance at moving averages, like the 50 or the 21-day moving average, just you have to keep an eye on it and be cautious.
All right, got that. Dean, always a pleasure speaking with you. Thank you for helping us out with individual stocks as well as the overall market momentum. Have a safe 2022.